Hello friend, we're on the last lesson of this course now. Wow, that flew by, right? In today's lesson, I'm going to be answering the most frequently asked questions. You may be wondering, Zhen, you've only talked about how great pre-construction condos are, but I have some yearning questions that make it seem like a huge mistake. Don't worry, I'm going to use this last lesson to address the most frequently asked questions, the good and the bad. Number 1, oh my god, if I buy a new construction condo, I'm delaying my rental income. Yes, this is a question I probably get asked the most. While this is true, you must think big picture. First off, if you can find me a cash flow positive condo right now, I'll go buy it with you. These assets are like unicorns. I know they exist, I've seen them before, as well I've also recommended them to clients before who want to start collecting rental income right away. However, the big picture is the financial effectiveness of this condo will not be as long as a new condo. Let's say you buy a resale condo that has never been lived in before. It's just like the new one, so you can start collecting rent right away. You have to remember, you are paying a premium for the person who took the risk to buy it at the pre-construction stage. Unless the seller is under distress, no sane person will really sell you a property at a loss if they can help it. When you buy new, your benefits start as early as when you sign on the dotted line. You have the right to that unit and any appreciation that happens in the area. You will gain 100% of all the benefits of the investment. Number 2. Oh my god, Zhen, I have to pay HST on a new build? The answer to this question is probably the most confusing answer because everyone's situation is different. However, the simplest way I can answer this is when you're buying a new pre-construction condo, the price you see on the price sheet from the developer includes an HST rebate from the government that the developer applies on your behalf. It is the equivalent of an automatic rebate application that the developer deducts from the purchase price when you buy. Now, where this gets tricky is if you are not living in this unit or a family member is not living in this unit, then you are not eligible for this automatic rebate that the developer applies for you, which means when you close on the property, you will incur the HST. Now guys, this is Zhen here, me talking to you heart to heart. My fellow investors, please do not cheat the CRA. It's not worth the black star nor the pain in the butt audits in the future. So here's the silver lining to all of this if you're an investor. You can still apply for the rebate as long as you put a tenant in the unit and own the property for at least 1 year. So do not worry. If that was a little bit confusing, let me try to re-explain it for you. The best way to think about it is this. If you're living in the unit when you get keys, you automatically get the rebate and it's built into your price. If you're an investor, you do not automatically get the rebate. You must pay for it on closing and apply to get it back later, usually around 3 months. 3. Isn't resale cheaper? I touched on this question a little bit in the previous lessons. You want to buy pre-construction below market rate or at market rate so that when your condo completes, you have earned the difference between future market rate and current market rate. I do not advise clients to buy over market value projects unless the upside is huge, and by huge I mean massive. That is why not all pre-construction condos are worth investing in. You're probably looking at the wrong condo project with the wrong agent to begin with. Another reason why resale doesn't make sense is that you are buying a used product at the same price, which should be obviously cheaper, right? If you're buying a car and I give you a brand new 2018 Mercedes for $50,000, or a slightly used 2017 Mercedes for $50,000, which one would you want? 4. How on earth do people have so many condo units in their portfolio? This is often a question I get a lot, and I find that it stems from FOMO, fear of missing out, when they see the Asian mom landlord who owns multiple properties. Sometimes it's because they are wealthy and continue to grow their wealth using real estate. Most of the time, it is because they understand that real estate is a long-term game in which you need to leverage debt to win. This is the most common strategy used, but in order to understand this, you must understand how the lending system works a little bit first. When anyone buys a home, traditionally you pay 20% for the down payment and the bank gives you a mortgage for the balance of the 80%. Follow me so far? The question I always ask people is, when the property goes up in value, who keeps all the appreciation? Does the bank get 80% of the appreciation because they paid for 80% of the property on closing? Of course not. You, as the investor, get 100% of the appreciation for paying 20% of it. So that is why real estate is a game of leverage debt. In the words of the famous Robert Kiyosaki, good debt makes you wealthy, bad debt makes you poor. The mortgage is good debt if you have a tenant paying you rent. Financing a new car is bad debt because you're the only one paying for it. So in order to grow your portfolio even faster, you must leverage the equity you have in your current home and or your future properties so you can buy more properties and faster. So to answer the question posed, many investors use the equity in their principal home to buy investment properties and or use the appreciation they've gained in the pre-construction phase to buy more properties, effectively decreasing your timeline to living your life on your terms faster. 5. What is the 10-day cooling period? The 10-day cooling period is a regulatory law created by the province of Ontario that basically says you have 10 days to return the unit you bought from the developer, no strings attached. Many people often use this time to get their mortgage commitments from the banks and have their lawyers review the documents. A lot of the time when clients are thinking about buying into a really hot project, it is always better to submit a worksheet and potentially sign the document than to wait, because more often than not, the project sells out. However, savvy condo investors use this 10-day cooling period to secure a unit ahead of time before everyone else, so even if they do have to return it for whatever reason, at least they have the option to buy it. 6. There are a lot less closing costs for resale than there are new. This seems like a giant cash grab. Yes, while that is true, including the HST portion outlined in question 2, the major ones you incur with pre-construction condo and not resale are the development charges, or what we call levies, from the city, and some minor small ones such as utility setup and carry-on warranty enrollment. In the current market, developers will cap your levies and pay the rest due to the city out of their own pocket as an incentive for you to buy with them. These levies can vary on average between $7,500 for a one-bedroom and $10,000 for a two-bedroom. That seems like a lot of money, but when you outweigh all the benefits and the financial effectiveness of a pre-construction condo, $10,000 may seem very small. The other stuff, such as utility hookups and tear-on warranty, can vary from $100 to $1,500 right now. 7. But Zhen, I want to touch and feel my condo first. Well, this is a mindset you must overcome. I do not have a solution for you on this one. You must gain the mindset of an investor because you will not be living in the unit, but your tenants will. What difference does it make if you can touch and feel the backsplash right now? If the numbers work, it makes sense. Remember, please take the emotion out of real estate investing. 8. What if there are delays with my condo? Well, this one is normal. I always tell my clients who have bought a condo to expect at least 6 months delay. If the developer is on time, great, you can collect rental income earlier. If not, that's okay, because appreciation is still happening in addition to rental rates going up in the area. Just have the funds ready to close. Well guys, that wraps up the How to Profit from the Toronto Condo Market course. If you had any questions after going through the course and or are ready to start investing, make sure you reach out to me. My contacts are right here. I'll do my best to assist you on this exciting new journey of yours. Until next time guys, happy real estating. Well, I hope that animated version of how to profit from the condo market is very helpful to you and creates enough information and excitement for you to invest in downtown Toronto and the condo market. If you are looking for my pre-construction cheat sheet, which is how I take you from start to finish, meaning finding the correct project to filling in a tenant, I'll put the cheat sheet in the description below. All you have to do is enter your name and email and I'll send it to you, okay? Until next time, happy real estating. Make sure you get that document, it's really good.